We have seen gold, at least for today's session, under pressure, given that we're on this risk-on mood. Not surprising given the huge rally that we've seen this year. What will drive the next leg higher?
Well, not surprising. Gold, at the end of the day, is an insurance asset. And so when people are worried, it becomes accumulated. So with the last 2 weeks, the markets have been a little bit more risk on. So I think we expected to see a bit of a pullback. Long term, we see lots of trouble ahead. And as other commentators were saying, possible recession 10 years into the bull market, very negative interest rate environment, which suggests lots of problems both servicing the debt and having economies that are growing quickly.
Obviously one of the longer term factors, Peter, to own gold has been as a hedge against inflation, right? A store of value. As that comes off the table, does it really just become a pure volatility play or a contrarian play to kind of hedge against other assets?
Well, I don't think just a contrarian play. We do think that it was underutilized in the past and that there's a growing crowd of institutions that are holding it as a hedge against volatility and negative market developments. So it's much more broadly being accumulated now than we've seen in the past. But I think also the gold sector has been in illiquidity situation now for 10 years. So there's lots of stock picking to do within the sector on the equities as well.
We have seen elevated levels of ETF holdings, tactical investments. What about retail investors? Will we see demand there too?
Well, we recently swung into net inflows, so I think retail is slowly coming back, but those numbers aren't significant yet. So compared to where they were 10 years ago, this is still a sector that's very underfollowed by retail.